yeah, if you're a professional trader, you're an independent trader, you become a craftsman. I don't care whether you trade macro, technical charts, whatever. You become a craftsman at what you do. Stan Druckenmiller is a craftsman at the way he trades.
Welcome again to the FundSeeder Rise podcast. I'm your host, Emmanuel Bellari. And our guest today is Peter Brandt, who has built his career spanning more than 4 decades across some of the most volatile commodity cycles in history. He was associated with Commodities Corp, the pioneering Princeton-based trading firm that helped institutionalize discretionary trading. And Peter is widely recognized as one of the leading practitioners of classical charting. Today, his market commentary and charts are read all over the globe. He's actually a market wizard as well. And Peter, I'm like so excited. You're a friend, but you're also one of the pillars in the trading world. So I'm really excited to have you with me today.
We are.
Yeah, yeah,
We go back. We've got some fabulous shared experiences, don't we? I mean, just
absolutely. Still
really
remember.
quick.
I still remember, I think at the Fontainebleau, brokering the relationship between you and Jack Schwager, and you both are good friends now as well.
Yeah, that Las Vegas, wasn't it? Las Vegas?
Miami, Miami.
Miami? Okay,
Yeah,
yeah.
yeah. So,
Yeah, I do remember that.
yeah. Well, Peter, one of the first question, right, that I have for you is most traders that try to start trading don't even survive a few years, let alone, was it 5 decades that you've been a trader? What, looking back from the beginning to where we are today, what did you understand about trading early on that allow you to succeed where others have failed?
You mean besides luck into the pot? There's a little luck. I mean,
Yeah,
people will say, yeah, you earn your luck, right? And I
yeah,
do agree that's true, but the reality is that any of us in our life, you change little things that have happened to us in our life, and the timeline changes.
yeah,
You end up with an entirely different timeline. And so to a certain degree, I think, you and I share spiritual things too. We look and, to some degree, there's a sovereign hand at play in all of our lives. And we may think we earn our own fate. We are the masters of our fate. We are the masters of some of the details of our fate, but we are not the masters of our fate. I was lucky enough that I went into the Chicago Board of Trade. I think there were two things, Emmanuel, that is the reason that I'm still trading today after so many years. One is that I wanted to be a trader for a career, where some of these people come in today and they just want to knock it out of the park. They want to make it big. They want to make it now, especially nowadays. This Z generation who you're dealing with fund seeders, they just want to make it now. They're short term. I want to make it today, this week, this month, this year. I want to make it big, and I want to make it where I went in thinking, golly, how cool would it be to be a trader? I mean, you can pick a lot of professions. How cool would it be just to be a trader?
yeah,
And so my perspective was long term from the get go. It was, how do I build something that lasts? And so that was a really big thing. I think, Emmanuel, it was a perspective. It was a career choice, not an idea that I can trade commodities and get rich, but I can trade commodities and live. And then
yeah,
second thing was I had especially one mentor who understood risk management better than anyone else I've ever met. And he just punished me. He just clobbered me over the head with themes and ideas and concepts about how you actually last. How do you trade for permanence? How do you survive today so you can see tomorrow? And so he was a big influence on me as a risk manager. And so he helped me understand that trading is risk management. And even you go through all of Jack's books, you go read, Jack's interviewed what, 80 some, less count I talked to was 70 some, now it's 80 some guys who have made it to some degree in trading. Some have faltered, a lot of them have made it. Uh, so
Yeah.
I think those 2 things really are the reason I've still been able to trade and have actually made a living trading.
Yeah, that's very insightful, Peter. I think you touched upon two things. One, mentorship, which we have talked previously on the podcast. I want to talk about that. And then the first is really viewing it as a career. And I don't think I think you're right. Not that many people in this day and age come at it through that conclusion, but it's pretty much, I would imagine, very similar if you want to become a plumber or a mechanic, or if you want to become a doctor. You just can't take a course and then immediately expect to be successful, right? There's a certain amount of like, okay, you're coming in with this idea of learning and almost this humility of listening from those who have gone ahead of you.
The interesting that's such a great observation, Manuel. I remember when I went on the board of trade, I mean, there were guys that were in the pits that were on Omaha Beach in World War II. They had the scars to prove it. You'd ask some of them, "Hey, pull up that left pants leg again. Let me look at that." And we realize these guys have paid the price, whether they're long beans and we're short beans. They're long beans and we're short beans. We don't think they're idiots. We
Yeah.
still look at them and go, "Wow, you know, I've got something to learn from you. You've made it. You've persisted. You've lasted. There's something about what you do that maybe I don't do exactly, but there's some principles and concepts that you figured out, stumbled upon, lucked your way into. Where now it's like you got these young guns come in, and if you view things the way that they don't view things, you're like an idiot to them. There's
Yeah.
no respect. There's no institutional respect. There's no, a lot of these young traders, there's no sense of tradition. They don't look at trading in terms of its sense of tradition. And it's a shame. I think they're missing a whole bunch by that.
And we'll talk a little bit later about your massive Twitter following, which is an impressive in itself. But is this one of the reasons where you started off, you had the mentors that you feel like you want to give back and you want to like mentor traders in a different way? And I know you have mentored, we were with some of these other market wizards, that I've had the pleasure of talking to, the younger ones, and several of them have attributed you as a mentor, although far and through technology rather than just being side by side in a pit.
More than me being included market wizards, the biggest compliment I think, Emmanuel, is I think there are four. Jack mentioned there are four people that have since become market wizards that really give me credit to some degree for their understanding of how to manage risk. That to me is the ultimate compliment, frankly.
Yeah.
Not me being in market wizards, but four other market wizards saying, "Hey," being in the same room. So yeah, that's a real honor. But I just think yeah, guys that go down their mom's basement with a PC and think they're going to trade. Wow, the odds are so stacked against them if they're not taking some guidance. When I'm talking about guidance, I am not talking about beans, I'm long beans, so they think they need to be on long beans. I'm talking about concepts, philosophies, principles.
Yeah. So when you were on the floor, you're young. Around what age did you start trading at the Chicago Board of Trade?
Mid-20s, can you
Okay.
believe that? This
Yeah,
guy is
no,
almost 80. I mean, how
20,
crazy
30.
is that?
Yeah. So 5 decades. Right?
Yeah.
It's unbelievable, Peter. But I'd imagine even at that age, yes, you had mentors, but sometimes you have to go through the painful lesson yourself to really learn the lessons and actually apply it. Tell me about one of those lessons where, maybe you had, that changed really your whole perspective of managing risk and it took you out, if you will. Everybody has one of those stories.
I mean, you gotta understand, Emmanuel, I made my first trade in 1974, okay? I kind of became quote unquote full time in the commodity business in 1975. My first string of profits was 1979. My first real profitable year was 1980. We're talking about an extensive period of time, a learning curve. I'm talking about accounts that were blown out. I mean, I'm talking about raising money, opening an account, and ending having that account go bust or even deficit. And so you've gotta there's a learning curve. That's a question I asked Jack once. It's okay, Jack, you've talked to whatever, 70, 80 guys. How many guys hit the ground, had traction immediately, made it right away, first year out of the gate, and never looked back? I think Jack's answer was, I don't know, 3 or 4 maybe 5? Is it everybody else paid the price?
Yeah.
Is
what kept you going, Peter? I mean, because you
well,
have if you put in, if you have 100 people in a room, I mean, I don't know what the percentage or the odds are, but I would imagine after a few years, some of them are like, I'm moving on, especially you're young. This is not my career of choice. As others like dig deep and they get back up and they were like, no, I know I want this. But what made you, and maybe what's the mindset that you've observed of successful traders that they have to have this to be able to overcome and persevere?
a couple things. First, yeah, I'm a chartist. I trade technically, and there's the argument, is technical trading an art or a science? And I don't think it's either one. I think it's a craft. And you mentioned that it takes years. You become a surgeon, a heart surgeon. You're not a master the first time you cut a guy's chest open. You build furniture back in the old days of Germany. You weren't a master. You got mentored. You were an apprentice. You were an apprentice for years before you could consider yourself the craft. So I think, yeah, if you're a professional trader, you're an independent trader, you become a craftsman. I don't care whether you trade macro, technical charts, whatever. You become a craftsman at what you do. Stan Druckenmiller is a craftsman at the way he trades. So it's viewing it like I'm not. I need to learn, and to accept the fact that I need to learn through mistakes. Is it the way that you get to the point where you can say, I can do this as a living? You have to accept the fact that you're going to get there by solving problems. That it's not going to be an instant thing where all of a sudden your eyes are open and you go, I get it. The light bulb went out. Little by little, you solve little problems. What markets do you trade? How do you trade? What technology do you trade? What time frame do you trade? How do you enter? How do you size? How do you risk? How do you take profits? What's your process of placing an order? How do you do order management? How do you do appraisals? How do you review your performance after a period of time? That's just part of it. The biggest part is, how do you manage your head? How do you keep yourself from self-sabotaging? That's the biggest problem so many people have, is they self-sabotage their way in, and the reason is they're not self-transparent. They're not willing to deal with their own issues. And so I I had a big advantage in that when I came into the business, I came into the business through Continental Grain Company, which at the time was the second largest commodity merchant in the world next to Cargill. And so my deal with them is they'll train me, they'll provide me a seat, but I have to bring in business. I needed to bring in business, and I hey, the Lord bless me. I was able to bring in some really big business. And so, I'd get a fraction of a cent, literally a fraction of a cent a bushel is what I was paid by Continental to bring in business. And I brought in some pretty massive sized business accounts. This was the early 70s. Markets were just taking off. There was a lot of commodity risk that were involved by food processors, other grain merchants, and so forth. So I was able, with whatever it was $15 per 5,000 bushels of grain. That's what I was paid. $15 per 100 ounces of gold. That's what I was paid. So I had a good income, And so I didn't need to make it right away. I didn't need to say, here's my grub stake. I've got to hit. I got to hit right off the bat. I could afford to learn through my mistakes. I could afford to lose and still replace money into an account and do that 1975, 1976, 77, through most of 78 before I China figured out and lost enough money that I solved enough problems that I still had enough money to trade and put it forth and understand that I had to preserve it and had attraction. I had figured out, okay, I think I know what I'm doing.
Yeah.
Way to trade. I mean, I tried everything to trade in the first few years. It wasn't until really 1978, 1979 that I kind of figured out I'm going to do this using charts. That wasn't from the
So
start.
that wasn't necessarily like a mentorship. You tried, people had different styles on the floor, and you were, it's almost similar to, I mean, Jack talks about this often, is like there is no holy grails of trading. Like, figure out like what works for you. And you tried different things, and your personality was, it fit the charting. I'm curious before we move on, because we have I mean, I think we could talk and maybe do a master class, which we've done before together. But I'm actually curious your family of origin, right? Because as even to have this mindset of, hey, I'm going to start a career, I'm going to be focused, I'm going to be methodical. Like, what did your parents do, Peter? Like, what was your upbringing like? Growing up.
Good upper low class. You better figure out a way to make money to get it. And so I think I was born into a family situation, and perhaps I was given God given skills as a problem solver to figure out ways to do things. I had to figure out ways to do things. And I think that's what my mother challenged me with is, Peter, if you're going to get things done in life, it's up to you. It's on you. You're not going to be given it. You're going to have to find a way to do it and keep trying until you find a way to do it, and then keep working. You've got to keep grinding. You're going to get hit down. You're going to get knocked down. You got to get back up.
Yeah.
So I think it was inbred into me. Problem solving was inbred.
Yeah, that's we interviewed on this podcast John McCauley, who's a trading coach, if you will, and what you said was affirmed by what he said in terms of when I asked him a question, what are some sort of characteristics of some of the best traders in the world, and he said, the best traders in the world don't blame other people, or they don't blame the markets. It's not this entitled sort of mentality of, well, it didn't go well because of this or because of that, right? It's like, figure it out. And that really seems like that was also your DNA, where you grew up and early on, you knew that if you wanted something, you had to go after it, and there were no really excuses. You had the capacity and the God-given skills, if you will, to overcome or come up with a solution.
Hey, I graduated with a degree in marketing and advertising. That was my job. That's what brought me to Chicago, was working for, at the time, the it's now the largest advertising agency in the world, Interpublic, Omnicom trade. And, I might have had $1,000 in the bank, maybe. I had enough to pay rent for a couple months. And so I was forced. I had to own it. From the very beginning, I had to own it. There was nobody I could slough off something to. And yeah, you get to the point where you have to say to yourself, this is on me. This is not on anyone else. This is on me. I've got to do it. Sure, I'll use other people. But yeah, so I think the role mentors played for me, Emmanuel, is really understanding that, markets are big dog eats. You got to do it on your own. You got to do it by controlling your risk. That once you lose your money, you're out of the game. So you better make sure the next day that you have some money to trade, because when you don't, that's it. The game is over. Now, that happened to me, but luckily I had a job that I could restore it a few times, take it home. You better not risk than a couple percent of your money on the next bet. was make sure that you don't have sizing that'll take you out of the game. And so it was that kind of thing. It was mindset. It was trading philosophy. That's really the role of a trader or a trading coach, is not to tell you how to trade, not to tell you to use charts, not to tell you to use this, use that, but how do you think philosophically about the business of market speculation?
Yeah, that's great, Peter. That's great. So transitioning to when you joined Commodities Corp, take us through that leap and a little bit what made you decide to join Commodities Corp and just your experience there.
You look back at when we talk about timeline, right? You look back at that timeline, and you say, what were the big markers in your timeline? What things happened that were like, wow, that's just crazy? And for me, Commodity Corp stands up. I mean, that's a marker. And I think it was like, I had started trading, supporting myself 1979, 1980. I gave up all my customer business in 1981, deposited $88,000 into an account and said, yeah, I'm all in, guys. This is me. Now made some additional deposits as time went on because I kind of got paid by Continental for giving them the business. So I added more money as time went on, but I hit some markets really well. And, somehow I developed, people knew about me, and it was Commodity Corp that contacted me. And I think it was 83, maybe 83, 84 in that area, asking me if I wanted to participate in, back then, what they call it, a trader evaluation program, the TEP program, and to be in the TEP program. And hey, people don't understand really today what a prop trading phony. Marcus, I mean, it was the breeding ground monster traders. More, uh, and so you go into the TEP, they give you amount of money, and I think it was 30 or $40,000. That was it. Everybody got that.
Did they evaluate your track record in advance or was it just
They
word of
did.
mouth?
Yeah, you had to walk in. They weren't gonna give you money based on who you were, or how you looked, or whether you were a tie. I mean, you had to come in and you had to show them paperwork. They wanted to see your monthlies. They wanted to have you put together. There was a big questionnaire. I still have a copy of the questionnaire that they used. It was 5, 6, 7 pages. You had to give them documentation, what's your trading philosophy, what's your philosophy about risk. Yeah, so you fill out a questionnaire, then you provide them track records. You got to give them a track record. Then they allocate, and then basically they're evaluating you, and it's hands off. They're not bugging you every day. I mean, they're just basically, and I think from the get go, it was something like, 20, you have a 25% drawdown, we reevaluate. It was 25%, and it wasn't day trading. It was overnight trading. It was position trading. And then you had to hit certain marks. I think the marks were, you had to have a 2-year average return of 25% and a Kelmar of something like 2.0, and then you got refunded. They booted you up. And in some cases, you do well enough during the year, they come back and they say, we're booting you, we're adding. And so they give you more capital, and then you have to maintain that. And I think the maintenance was you had to keep averaging a rolling 3-year rate of return of 22.5%. And, traders today think, I need to make 300% a year. That's just a joke. And that was Commodity Corp steel. And then, there was hands off. They didn't bug you. They weren't on your case. They were there to talk to you. We had to call in every morning if we're going to trade something, because they were always looking at spec limits, and they might not grant you permission. You call in and say, I want to do 50 gold today. I want to do 50 bonds. They might say you can't do 50 bonds, or if you can, it's got to be in the June contract, or so you had to make some modifications, and then they keep bumping you up. And, I mean, everybody had their limits. I really never really felt comfortable trading any more than $15 million. That was kind of, that's my own head. That was a head issue for me. I mean, that was kind of putting in orders for 150 gold, and we're talking about 100-ounce contracts. There's a point at which a trader hits their limit. I mean, some traders, it was 1,000 lots. For me, it was 150 lots. and that kind of kept out.
So just Peter, just so you got for our listeners, right? There was this almost like a scouting call, like evaluation, very much similar, I guess, to FundSeeder, right? Which
Exact.
is quite interesting, which is why you always were an encourager for me with this idea. But then you came in and you joined. Now, did you interact with some of these other bigger traders? How many people at that time were trading in this what did you call it? Temp? The temp program?
Well, TEP program, but once you're out of a TEP program, then you're kind of accredited. I don't think accredited was the word, but you're through TEP.
You're in,
You're
you're
beyond
in.
TEP. You're
So how
in.
many started off in the initial program with you, that class, if you will, and how many at the end became accredited? I'm just curious if you know that offhand.
Probably, I mean, it's a better stat than you have for a FundSeeder because FundSeeder, they come in and they don't have all of that stuff up front to clear. But they're big names. I mean, Marcus, Bruce Kovner. I mean, all someone has to do is go Google,
Yeah,
Commodities Corp and see the lineup of traders they have. I mean, I ended up just being an independent trader. Most of those guys went on and established
yeah.
hedge funds and became billionaires. They counted with B's. I only counted with M's. But
Well,
I'm guessing,
some of them
pure
made
guess.
it huge. Sorry,
Yeah,
go ahead.
pure guess. 10% lasted 5 years. That's my guess.
Yeah, I would think that'd be about right. And
Yeah.
so what separated the traders who endured from those who disappeared? I mean, looking back, I mean, probably the same today, but if you would look back, I mean, was it just personal problems? Others just were not patient enough?
Well, in the first place, I mean, this eagerness, I got to do 10x on my money this year. That wasn't a mentality back then. Nobody had that. A few people did. I mean, there are a few people that, ran huge amounts of money into small amounts of money into huge amounts of money. But I mean, the average commodity corp guy that hung in there for any length of time, that wasn't the case. We did 30%, 35%, maybe 40% in a good year, something like that. But I think, Emmanuel, it was head management, risk management, head management, money management, head management, trade management,
So mindset,
process,
head
mindset,
management. Yeah.
process. I want to process. I want to approach trading as a business. I'm not out. I'm not out for ROR. I'm out for risk adjusted returns. ROR and Sharp are not measured. We never had Sharp. They
Yeah.
never had Sharp ratio for us. Sterling ratio, yes, not Sharp. But there was this emphasis on lasting, on staying power, not on these big numbers. Can you grind it out? Can you do 30, 40% a year? Can you avoid the 30% drawdown? Can you put in an MAR of 1.5? Can you put in a rolling 3-year CalMAR of 2.0, 3.0? That's the emphasis. Can you give us a return on our money to the point that we're willing to grant you access to our money? But even today, I mean, we've done a lot of numbers on the statistics of trading success, and I think people are surprised by how it's really hard. And I'm not saying that to brag. I'm saying that because it is tough. And I think if a trader comes in and is a good risk manager and a good process manager and a good head manager, I think I think they have a good chance of solving enough problems so that after 5 years they know what they're doing and they actually have a chance to become a successful trader with their own money or with somebody else's.
Yeah, that's good. So coming back to, you know, there's new traders who are looking to start off today. And, my son is 14, 15, and he's excited and he clicked on some FX video and I'm like, son, please.
Yeah, yeah,
At the
yeah.
very least,
They
I
don't-
could, yeah, at the very least, I could pass on some wisdom.
yeah, no YouTube, no YouTube.
But what would you tell, like from a habits perspective, if someone is looking to start to trade year one, you touched upon a few, right? Which is long term, have the proper expectations, focus on risk management, no get rich schemes. But are there any other like habits that they can start developing early that will help them year 5, year 10, that they should start like day one?
You gotta work out a way, well, first, you gotta figure out what markets you're gonna trade, right? I mean, are you gonna trade stocks? Are you gonna trade crypto? Are you gonna trade futures? I mean, I'm a futures trader, but you have to have, um, I think, a realistic expectation, and for me, a realistic expectation is if you can do 40% in a year, you've just joined the legend class,
Yeah.
right? I mean, you look at Soros, Druckenmiller, Paul Tudor Jones, Bruce Kovner. I mean, you're talking about guys that are in the average annual return range of 30, 40%. Yes, there are those guys that run 10 grand into a million in 4 years. They are so few and far between that it's not a realistic
Yeah.
expectation. You can't think that way. That's a one in, those guys are one in 10,000.
Yeah.
You gotta wanna be willing to be a 3 in 1,000, and a
Well, what if they
3
have a million followers?
I don't know, what does a million what does that mean?
No, I mean, you know, it's a joke, right? Because I
Yeah.
mean, I see
No,
that
you
you,
gotta figure out in the first place, you gotta at some point identify here is what a trade is for me. What represents your trade? Distinctly, what represents your trade? How do you know when you have a trade? And until you know that, nothing else can happen.
yeah,
Because that's the starting point, is you gotta figure out what is a trade for you, define it. From that point, you can solve all the other problems that come with that.
right. So what I hear you and just kind of re-articulating it or repackaging it, you're a young trader today. One of the habits is you have to know and have process. You
Oh,
just
yeah,
can't be cavalier, like whether it's trading the market, like what is your process? And
yep.
then how do you evaluate that process like on an ongoing basis and but not sort of those are almost like guardrails and that helps from long-term survivals. So transitioning a little bit and we could talk again like we talked about Peter for forever on these topics, but one of your processes or what you came upon was classical charting, and that's what you really are known for. You've used it throughout the decades. I'm curious, was there a time where you thought to yourself, this no longer works? Like I'm in
Yeah.
drawdown, like the market has changed. Tell me about that time and then tell me what allowed you to like come back and endure and still finish strong.
Another I really went back. I came back in 2006, 2007. 2013, I had the worst year of my life. It was 2013, I was down guys 2000 when I did in the last 15 years right now. And that's normal. I always have some drawdowns, but in this particular drawdown, I bought into a lie that the markets had changed, right? What you used to do doesn't work. You got to find something new. So I started experimenting. I got off the rabbit trail. I was done. I started wandering down other rabbit trails. Do I need to add in things? Do I need to add indicators? Do I need to change up things? Do I need to bring in some global macro stuff? So what happened is I accelerated the drawdown. I believe to this day that 3 months into the drawdown, if I would have dug in and said nothing changes, I keep grinding, I probably would have been out of that drawdown by month 6. I do believe that. But instead, I made things worse, and that's when I produced the down 13.5%. Didn't start as down 13.5%. It just started as a losing streak, series of losses. It ended up turning into an 18-month peak to valley, new peak drawdown, Emmanuel, my longest ever, deepest ever in that period of time. I had deeper ones early on, but I'm talking about once I really became a career trader. It was the deepest one since I had came back in 2007. Finally, it was guys like you, it's guys like Christian in Scotland, it was my peers who said, "Peter, you've got to go back to your basics. Forget this nonsense. Redefine who you are as a trader. Reframe your issues. Figure out what you do and make up your decision. Go back and do that. If it doesn't work, quit and do something else. But don't change. Go
Interesting.
back to the basics."
Was it at that time that were you managing money? Did that have an impact?
I was managing money indirectly because I got involved, people had always asked me, "Peter, will you trade for me? Peter, will you trade for me? Peter, will you trade for me?" My answer was always no, 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 no. But then, there was a back in a period of time where there became a vehicle for me to say to friends, "Here, I think you should put your money here." And so I was part of a process
Yeah,
that
so I'm wondering, yeah, that's what if you were not and you would be trading your own account, I'm wondering, again, hindsight's 2020, if you would have just stuck it out and been consistent to what's worked for 20 to 30 years. Did that have an impact knowing that there was somebody looking over your shoulders? Okay, got it. Yeah, yeah, got it. So it had nothing to do with that.
Yeah, it had nothing to do with that. I think it had to do with buying into the lie the markets had changed and changing things up. And the other thing is I don't want to trade other people's money.
Yeah,
I'd be lousy if I had been trading other people's money, Emmanuel, then I would have said, yes, absolutely. That's what forced it.
yeah,
But I am not an OPM trader, and I realize I'm not an
yeah.
OPM trader.
And most market wizards are not. I mean, I've spoken to, as you know, many of them, and generally they don't want to be bothered with trading other people's money. And that it takes like I don't know if it's almost like a supermarket wizard where you have a Stephen Cohen or a Bruce Kubner that decides at some point, I want to now take it to the next level. And I'm imagining they have a characteristics of greater ambitions. They know how to manage people as well. That's like the next level that takes it. But generally speaking, successful traders who trade their own money still struggle for some reason to manage other people's money. But that's a different topic altogether. But I have a question. So, like this idea of, and you've stayed the path with charting. You had that little period of time where you try to adjust. I see both sides of the coin, right? If you remember, which you do remember, the turtle traders who were very successful early in the 80s, and they were pretty steadfast in saying, "Hey, no, this trade the system, trade the system." A lot of them lost out and are no longer around to the up and coming trend followers, if you will, out of Europe that were, let's figure out models and let's adapt and see something new. And those ended up being very much successful. So how do you balance like classical charting, like it's working, and then at the cross section now you have AI, which is it's another topic we talk about, and realizing that the markets are changing or there are flows coming in, and it is a little bit different. Like, I mean, I know that's a long-winded, loaded question, but how do you balance that as a classical chartist, where yes, the charts are still there, but the world is changing?
Well, I think for me, it's more emphasis on risk and trade management, not trade identification, right? I mean, it used to just be trade identification. You made it on trade identification and sizing, where you didn't have to be so obsessed with the data side of the business. Where now I think you have to be. I think where AI is people will say, well, AI is going to change trading. I guess I'm going to be skeptical on that. I'm going to view that the same way I viewed what algos and HFTs do. Are they really? Are they going to dramatically change it, or are they going to change it in nuanced ways that we can adjust to in nuanced responses? And I guess that's my thinking is in some ways they are going to change it, but at the end of the day, it's a human being that pushes the buy or sell button. And at the end of the day, you bring in human emotions, you bring in human fear, you bring in human greed, and you can have. I mean, today, for instance, I used AI today. I used AI to create arguments for why the dollar will be stronger in 2026 versus the euro currency and why it be weaker. AI gave me really good answers on both. I said, today I'm the one that's going to have to push the buy or sell button. I'm the one that's going to have to determine size. I'm the one that's going to have to manage the trade. I'm the one that's going to have to take the loss. And, AI may give me some probabilities. So I think AI will change the landscape, but I don't think it's going to, I think AI is going to change living. I think AI is going to change a lot of life. I don't personally think AI is going to change the life of guys necessarily that look at charts like I do, because I look at charts differently today than I look at them in 1975. I look at them differently today than I looked at them 10 years ago. And I think when I look back, I have made modification. Every year I make tweaks, and those tweaks, I think, have been in response to what I view as some changing characteristics of price discovery, because that's how marketplaces are. A marketplace is a place where there's price discovery, and there's a lot of inputs that go into the price discovery process. AI is now one, but ultimately, price discovery is made. There will be trends, there will be chops. And AIs will not cause trends. Manuel, I do not believe that do not I do not think the chart market's gonna go. For me, all the chart tells me where markets, and hopefully it can tell me when I have an asymmetrical reward to risk opportunity, where things get stacked piece by piece in my favor to the point where I'm willing to take a risk position, put $10,000 at risk to make 40,000. That's what I want a chart to tell me.
Yeah. So it's even though you're known most as a classical chartist, and that's what you've written a book on, and or you post these charts on Twitter and the factor report. What I hear you saying is that it's actually the risk management focus that is the most important piece of it, and I think those market wizards that you alluded to that credit you, they're crediting you with how you just really just kept on pounding this idea of risk management. And I think you say this, which is strong positions weakly held. Is that your phrase?
Yeah, I don't think I originated that, but it sure resonates with me, right? I
Yeah.
mean, I get criticized in Twitter. Hey, Peter, you're bullish on that market last week. My response is, yeah, and I may be bearish again next week. I may be bullish the week after, and I'm okay with that because my opinion is not my position necessarily. My position is not my opinion necessarily.
Yeah.
And
That's good.
I want to be but I just think that at the end of the day, it's risk management, yes, Emmanuel, but for a trader trading OPM, it's headspace management as well.
Yeah.
Our own worst enemies of our creation. We sabotage ourselves at every turn. And I think especially for proprietary traders, especially, they have to be very aware of the fact their competition is not other traders. Their competition is not the marketplace. Their competition is themselves. They have to overcome self to really find success.
Yeah. Yeah, that and that's true in trading and in life. Again, the common theme, which has been fascinating to me of interviewing people for this podcast, is that theme of having a strong mind and really being focused on and how you view and another, for example, another point that one of the psychologists mentioned was the best traders in the world know how to deal with uncertainty. They really know how to handle it well, that no matter what, the future is uncertain, and that's true in every sense of the word. But I was listening to a podcast of an actual brain surgeon, who's studied the mind, and he was saying how 80% of the thoughts that come into our mind are actually not even true, and they're not true. I mean, 80%. But what we focus on does change our brain, like in terms of how it focuses. So like I'm just kind of summing up that really at the end of the day, this idea of a strong mind and a mindset in trading, regardless of what's happening, is the key.
Yeah, I think so. Now, I may be unique because I'm on the spectrum. I'm a spectrum kid. I've Asperger's. So, my mind is not a singularity. I mean, my mind is a board meeting with 10 people talking at once. And so at the end of the day, I have to be the judge and decide which people in the board meeting am I going to listen to. Because, somebody's out there saying, buy now, buy large. Somebody else is going, well, I don't know. I want to listen to the old man in the corner that says, protect your wallet.
Yeah.
Put your wallet in the zip pocket. So that's the guy in the boardroom I want to listen to. And so you got to decipher through all of those things. And you got to decide, how do you think? How do you process information? How do you make decisions? How are you wise? What does wisdom look like for a person who wants to be a market speculator? And I think that's a challenge these young guys have to figure out. It's just not a matter of some signal from a computer. It takes that, but the endeavor of market speculation is multifaceted. It's not just a matter of I can predict markets, I can do a 4x on my next Bitcoin trade. Being a trader is a whole lot more than that. It's really truly becoming a craftsman at what you do. It's finding fine edges. Not only finding your niche, but it's finding little cracks in your niche and little cracks within the cracks, and really digging deep into how you solve problems and what that looks like. That's the commonality I find between kind of guys that think they can knock it out of the park and guys that really you want to listen to because they're accomplished, they're thoughtful. Jack once a lot of these young guys think these trading rooms, their people are yelling and screaming, and it's all action. Jack once told me, I said, what is the average office like of Market Wizards? And he goes, yeah, kind of like an insurance company, like a coroner's office. You go and there's nothing spectacular. No one's yelling, no one's shouting. You know, People know their job and they just do it. And I think that's the process that you have to go through, is you have to work it out and have it become routine and regular, and think through all of the details. And it's a process. You got to work the process. You got to figure out what's your process and what's all involved. What are all of the decisions and sub decisions that have to be made in the process of a trading year? That's what these young guys have to figure out. They have to think through it all, and they'll
Yeah.
learn it. They won't know it at first. Most of it they learn.
So there's no necessarily like shortcut where you could use ChatGPT or Claude to even say, these are the rules for risk management. These are the ways I view it. Stick to this. That doesn't, I mean, that might work for a season, but
Yeah.
the markets are always evolving. And ultimately, you always have that drawdown that you don't know. And then the question is, do you override it or not? It's still, you can't, what I hear you saying, Peter, is you can't shortcut the process.
No, I have people ask me that, is, "Can I trade just like you?" And I say, "No, you can't." Why can't I? The reason is, you can go through the process when I'm in a winning streak and trade just like me. But the minute I hit the skids, you can't make it. No one can go through a drawdown unless they completely understand what's going on with their trading practice. The only way you can make it through a drawdown is you have to own every aspect of how you trade. And that's why, I can come up with my 10 best rules, and somebody might read them and go, hey, I like that rule. I'm going to adopt that rule. And so you pick something, and I'd say that for the younger guys, pick something here, something there, put it together, create your own mosaic. You might have a little piece of your mosaic that comes from Peter Brandt, a little piece that comes from somebody else, a couple pieces that came from Market Wizards chapters. You put them together, You test them out, you forward test. I'm not a big believer in back testing. I'm a big believer in putting together a game plan and then working it through forward in a forward motion. You work it through. You work it through and work it through and work it through until you find something that works. And that takes 3 to 5 years.
Uh, at what point, Peter, is someone who's decided to trade, is trading, should just quit? I mean, like, this is not from you. Like, is there, I mean, I know that's a difficult question because that's not you. You're still going strong, but surely there's a point where somebody just can't continually go on this path. And as a side note, and you're probably seeing this, whether you're probably out and about. I mean, I'm hearing everybody who, I mean, whether it's my friends or parents of my kids, I want to go into trading. I want to start trading. I think I want to do trading.
Yeah, that's about
At what
right.
point should we discourage people to go on this journey?
Well, immediately. I think you immediately discourage them. Don't. I mean, here is what I tell people is they say, I just want to be a trader. My advice to people is go either get an education or get a trade. Learn to be a welder. I told my grandson that. Don't go to college, go learn to weld. If you can work with your hand, go be a welder. Then maybe you go back to college. But if you start trading before you quit to become a full-time trader, several things have to happen. First, all of the money that you're going to use to open your account needs to be profits from your previous trading. Not a loan against your house, not a gift from your father, not your inheritance, profitable money. That all has to be profitable money. You should not quit your job and become a trader until all of your account represents profits from past trades. Number one. Number two, expect your first year to be a loser. Number three, have enough money in the bank to support you and your family in your family's lifestyle for at least 1 year, preferably 2. That doesn't count the money in your account. Don't count the money in your account as the backup money. It's got to be extra money, so you have to have that. And then finally, don't really expect that you're going to be making 10x money. Don't expect 100% a year. Have something reasonable, 30%, 40%. So you have to have enough money in your account so that 30% gives you profits upon which you can live then subsequently. But in the meanwhile, keep welding, get a job as an engineer. Don't go into get a degree in philosophy, history, psychology, get something personally, but have a job. And so you have something to fall back on. Don't take the leap until you know there's a net underneath you. Don't go on the high wire until you know there's a net. And then do it. But if you don't like it, you gotta like it. The goal is not to be the big money. The goal is to be really good at something, right? You go in and become a professional baseball player because you're really good at it. You enjoy play baseball.
Good point.
You do something you enjoy doing, because if you don't enjoy trading, if it's a grind, if you're up at night, if you're worried about your position, and those are kind of the tells. And if those are the tells, if you're obsessed with your account value during the day, it's probably not for you. And so that I think is, when it comes down to, Emmanuel, the same thing with life, self-transparency. Be honest with yourself. Dig deep into yourself, know yourself, because you're not going to be a good trader if you don't know yourself and honest with yourself.
Yeah.
And so you got to be aware. Why are you doing it? Why do you want to trade? Because you want to make $1 million bucks. Wrong reason. Wrong
Yeah.
reason. You want to trade because you really think it's be a cool thing to do. It's a cool thing to learn, cool thing to be good at. That's the right reason.
Yeah. Again, the theme of some of these interviews you touch upon is some of the most successful traders are self-aware. Like, you exactly, you touched upon that. Peter, a few more questions, and this has been amazing. Why don't you just retire already? You've been going strong. You're more active on Twitter than probably Elon Musk. Like, what
Yeah.
motivates you to keep going And of course, I'm kidding about the retiring aspect of it, but
Yeah.
like, what's kept you going?
I mean, I like doing it, right? Well, in the first place, my body, as you know, is, I live in this broken body that I can't go out and play golf. I can't run marathons. I can't even bike anymore, which I'm really disappointed with. And so I'm limited to what I can do. I'm kind of the chair I'm sitting in kind of is where I need to be during the day. It's either here or it's watching TV. I mean, I can do a few things. I can swim. I can do a few things, but it's to keep my mind working. I think I really want to be aware that if I stop thinking, I'm a scared my mind will kind of drift into nothingness. I need to be thinking about things. I need to be solving a problem. I need to be thinking, and I need to be expressing that. You know, I think by writing, I mean, it's everybody has the way that they learn, their learning process. I think I'm a visual person, thus chart, and I write a lot because that's the way that I flesh out ideas. I flesh out ideas by writing about a market. Here's what I see in a market. Here's a market. Here's gold. Here's what I see. Here's what I see as the risks. Here's what I see as the unknowns. Here's what I see as various aspects. And that's how my mind processes information to the point where I can actually say, this is going to be one of the 120 trades I'm going to do this year, right? So it's 2 to 3 trades a week. How do I work my way to those 2 to 3 trades a week? Part of that way is by always processing information, by posting. I'm a Bayesian. I'm a Bayesian thinker, which means that on any given market, I want a narrative in my head that's bearish. I want a narrative that's bullish. I want a narrative for $1 million Bitcoin. I want a narrative for $10 Bitcoin. I want a narrative for $2,000 gold and $10,000 gold. And that's where AI comes into play for me because I can ask them for that narrative, then either accept it or reject it or ask for a modification. So I always have a binary thought on any given market in mind. And then it's by writing that I can flesh out how I think about those binary alternatives and then putting them together with what I see in the chart until all of a sudden I have an asymmetrical risk reward, at which point I will then, by the fact that I'm exercising a trade, in fact, on a de facto basis, accept one of the binary narratives, at least with controlled risk. And so it's really by writing, it's by tweeting, it's by answering emails that really allows me to kind of process my thoughts about a market. I can't just look at a chart and go buy,
Yeah.
sell. I have to work my way through a chart with words.
Yeah, that's good. I mean, so it's just staying active. And I had actually asked Thomas Petterfy the same question, like, when can I throw you a retirement party? And he's like, never, of course, because, being active and just and doing that is something that is just part of your DNA. But Peter, really grateful and thankful to have you on this podcast, sharing your wisdom. Obviously, the wisdom you have shared for many years to aspiring traders globally. Appreciate your friendship. And thank you again for joining me today.
Yeah, if we can get a copy of this, I'd love to put it out and have people see it. Of course, I'm constantly telling people you want to get a track on your trading. Do FundSeeder for goodness sakes. I can't think of any other way. People are chasing these phony prop firms on Twitter and YouTube. I'm going, what are you doing? You really want good numbers on your trading? I'm a big believer, Emmanuel, on metrics. I'm all about trading metrics. A rate of return nonsense, win rate nonsense, Sharpe rate ratio nonsense. You got to dig deep in metrics. There is no better way for a person to have a portfolio of their metrics than to join the FundSeeder world. I don't know, people are idiots for not being part of FundSeeder. So if you can make this available to us, I would love to have everybody who might listen to this old guy watch this time between two friends talk about the world of trading and the world of life, which more often than not, you and I talk about is the world of life. But
Yeah.
this time we had the chance to talk about the world of trading.
No, that's true. And yeah, FundSeeder, it is an excellent tool. Obviously, the metrics that provide traders, but then you could also see how you compare against other traders themselves, which is, most people are in a silo and have no idea. And maybe they think they've done well, or they're hard on themselves because they have a drawdown until they see, well, that's actually in terms of whatever the universe they're comparing themselves is not that bad. And so it is a good point. Well, Peter, thank you again. And we'll definitely get this out to you as well.
Thank you, Manuel.
Thank you for joining us on the FundSeeder Rise podcast, where we spotlight exceptional independent traders from around the world and explore the future of active money management. To learn more about FundSeeder, our mission, and how we support emerging managers globally, please visit us at fundseeder.com. The information shared in this episode is provided for educational and informational purposes only and should not be considered investment advice or an offer or solicitation to invest in any fund or trading program. Trading futures and other derivatives involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Until next time, stay curious, stay disciplined, and keep rising.